Hey everybody, where am I? I'll go over here. Hey, welcome to the daily update for Monday, December 1st, 2025. Hope you had a great 3.5 day weekend. I'm just going to jump right into it. Normally, I try to make the daily update about 10 to 15 minutes, but whenever we get a new influx of subscribers, I like to do a little bit of an extended daily update so I can kind of give you the lay of the land. So, what I want to start with is I want to start with what I think the value prop is, how I think you can use the Lund loop if you are a beginner, if you're an intermediate, if you're a pro. Then I want to do a little bit of housekeeping, and then we will jump into the full daily update. So if you're a existing subscriber, you can probably just fast forward to like the 14-minute mark and skip all this stuff. So here we go. Okay, so as a Lund Loop subscriber, I want to talk about how you can get the most out of this service, whether you are a beginner, an intermediate, or a pro. So let's start with a beginner. If you're a beginner, the most important thing for you to understand is rule number one. This is the most important rule. It's the most important Lund Loop profit principle. And it is don't blow up. Okay? Do not blow up your account before you become a sustainable trader, a profitable trader. That means don't lose all your money before that happens. All right, I've got some good news for you and I've got some bad news for you. Now, if you're like me, you like the bad news first. So the bad news is there is no shortcut to becoming a profitable trader. It's all about screen time. The more screen time you have watching the market, studying things, the quicker you will become a profitable, sustainable trader. Now, here's the good news. There's a lot of junk out there, stuff that you could waste years paying attention to. But here in the Lund Loop, we've created a structure. We've created a community and we've created educational content that focuses you on what's important about getting to that sustainability part, okay? And to illustrate this, I want to put up a very complex drawing that may or may not have been done in Microsoft Paint. All right, so what you're looking at right here is an illustration of how most new traders come into the market. On the left-hand side, you've got that vertical axis. That's the capital that they bring into the market. On the bottom, you see the horizontal axis. That's the time from when they do their first trade. And on the right-hand side is sustainability, that big bag of money. The problem is most new traders blow up their account before they get to that sustainability. Now, if you're a Lund Loop subscriber now, the Lund Loop is that green line right there. We are trying to bridge that gap. We're trying to shorten that time frame so you become a sustainable trader, someone who's consistently profitable before you lose all your money. Okay, so how do you do that? Well, here's how you do it. You watch the daily update because the first thing I talk about in the daily update is where we are in terms of risk on or risk off for the total market. And that's important because we want to know, do we have headwinds or tailwinds against us in our individual trades? Risk off means defensive. Fewer trades, smaller position size, shorter time frames. Or it can just mean stepping out of the market, just not being involved until conditions improve. Risk on means more trades, bigger position sizes, and longer time frames because we're pressing it. The environment is good for us to press it and make the most profit. So you watch the daily update and I show you where I think we are in terms of risk on or risk off. I also show you which stocks in there that I think have the best chance to make the most amount of profit in the next 1 to 3 days or 1 to 3 weeks. Those are the stocks that are on the daily setups list and the stocks that are on the active stocks watch list. Okay, so I'll do that part for you. What you've got to decide is what stocks you want to trade, how you want to trade them, how you want to manage your trade, and how to exit. Now you're sitting there saying, oh, I'm a beginner. How do I do that? Well, I'm going to show you how you do that. You go to the Lund Loop website and you go to the Deconstructing a Trade tab. And what you do is you look at all of these core concept videos. You watch these videos, you study these videos, and you watch them again. This gives you a general idea of how we approach the markets. Then you go to the setups and entries section. This is where I talk in specifics about the concepts of getting into stocks. Anyone can put up a chart and say this looks great, but it's getting in. That's where the rubber meets the road. And I talk in detail about how to do so in the most risk-averse way. Then you look at the position sizing and trade management videos, right? So you keep looking at these videos and you keep studying these videos. And then you have questions about these videos. So you submit an AMA question to me, or you ask someone in the community in one of the designated channels a question. And this process goes over and over and over again. Because here's the thing, and nobody wants to tell you this, but good, consistent, profitable trading is boring. It's cookie cutter. It's you doing the same things over and over again. So you're studying the videos. You're looking at my daily update. Are we risk on, risk off? You're looking at individual names, right? And then maybe one time I'm breaking down a trade that triggered and you go, oh, I saw that from the video. And this is all self-reinforcing. Here's why this is important. A lot of people have trading systems. A lot of people market their services. We've got a system, or we'll tell you when to trade or when to sell. The problem is, in 99 out of 100% of those situations, that system or that methodology will not fit you. It won't fit your emotional makeup. It won't fit your risk tolerance. It won't fit what you're trying to accomplish in the market. And so it won't work. What we're trying to do here is give you the tools for you to build your own organic system and methodology inside a supportive community. It's the difference between buying a suit off the rack and getting one custom made for you. One off the rack, it's going to look great, but you're going to try it on, it's not going to feel right, and in a couple years, it's going to fall apart. Whereas if you go get one custom made, a quality suit, it's going to look good, it's going to feel amazing, and it's going to last a lifetime. But you got to put in the work. So as a beginner, that would be how I would approach the Lund Loop. If you're an intermediate trader, you probably know a lot of this stuff, but I'm guessing one of the areas that you might be struggling is on psychology, market mindset. So again, you go over to the Lund Loop Deconstructing a Trade Archive, and there's a whole series of videos on the trading mindset. You can also go look at the Meditations on Market series. And there's even some Ask Me Anything videos that have to do with psychology and mindset. All right, so what if you're not a beginner? What if you're not an intermediate? What if you're a pro? What's the value of the Lund Loop if you're a pro? Well, to me, let me personalize this a little bit. I'd been trading over 30 years when I started the Lund Loop community. And once I did, and it got to a certain critical mass, my trading got exponentially better, right? And here's why. When I'm talking about how to enter a trade, when I'm talking about how to manage a trade, when I'm talking about whether we're risk on or risk off, it looks like I'm talking to you, and I am, but first and foremost, I'm talking to myself. I am self-reinforcing the rules and the methodologies that I have, because trading is not unlike trying to get fit. You don't just go to the gym, work out once, and you're done for life. You have to keep going. You have to keep being consistent. I have to keep self-reinforcing these rules. As a pro, when you're contributing to the community, when you are helping people out, when you're paying it forward for all the people that helped you, you're also helping yourself reinforce your rules to be a better trader, a more profitable trader. In addition to that, you've now got 600 eyes on the market. So you probably know how to trade. You may even have stocks that you trade. But I guarantee you're going to find some things are going to be surfaced here that you wouldn't have seen that you can profit on. Or you might have a situation where you've got a analysis or a thesis on a stock, you post it into the trading room and you get some feedback that says, oh, you know what? I think that's the right thesis, or I didn't think about that. Or you see me post something about the same stock and that reinforces what you're already thinking. So whether you are a beginner whether you're an intermediate or whether you are a pro. I think there's a way for the Lund Loop to help you become more profitable and to do so with lower risk. All right, let's go to the housekeeping. A couple things here. The Lund Loop is built upon the Substack network. That is a platform unto itself. So when you signed up for the Lund Loop, you created a Substack account. That's your account and I can't manage it. There's nothing I can do with it, right? It's yours by yourself. And because of that, it sometimes creates a little quirk with the daily update video. And here's the quirk. I have an intro part of the video that's for free subscribers, and then it goes behind a paywall. So when I send the video out, it goes out many different ways. I send it to you as a subscriber via email. I also post it in the trading room. And I also will post it on Twitter, on the Substack notes forum, and I'll also post it on StockTwits. So what happens is oftentimes people will, let's say, watch it from their email. And they're clicking it, and it opens up in Chrome, and it plays, and they see the full video. But then maybe one time they watch it on their laptop, or maybe they click the link from the Discord or from social media. And because of the settings, when it comes up, either that Chrome is not synced with your other Chrome, the one that's logged into Substack, or let's say it brings up Safari or it brings up Edge or some other browser that's not logged into your Substack account. And what happens is you watch the free part and then it cuts off and it makes it seem like you're not a paid subscriber. So how do you avoid that? It's very simple. If you go to www.thelundloop.com, you should see your own icon right here from Substack. And if you didn't create a custom icon, you still should be able to click this down arrow, and you should see all your information for Substack. Now, if you go to the www.lundloop.com, thelundloop.com, and you see this page here, you're not logged in to your Substack account. And if you close this page and you see subscribers sign in, you're not logged into your Substack page. So make sure you're logged into your Substack page on whatever browser you're using. You can also download the Substack app. And once you log into the browser, you'll be logged in forever. If you would like to send me a question for the AMA video series, don't send it through the trading room DM, and don't send it on notes on Substack because I very rarely check those. Send it to Brian, B-R-I-A-N, at thelundloop.com. And in the subject line, just put AMA question. That's it. I've got a filter that will surface it to me, and 99% of the time I will see it. If I don't get back to you in like 3 days, hit me up again. But most of the time I'll ping you and I'll say, great, I'll do this in a future AMA video. Now this is really important. I can answer your question better the briefer and the more specific you are. Sometimes I get people that say, hey, can you take a look at the Google chart? Or what do you think about Apple? And my reply is like, I don't know. Like, are you a long-term investor, short-term investor? What's your strategy? What's your risk tolerance? Like, the more concise and the briefer the question, the better I can answer it. So like 2 to 3, maybe 4 sentences. Sometimes I get like a novel, and I'll eventually read the novel, but it might be like 3 weeks from now when I have some time. So brief question, specific question, I can answer it better. Last, not least, this is the most important thing. Unfortunately, there are lots of impersonators out there on all the different platforms, on Substack, on Discord. I can't do anything about it because all these accounts block me, and so I can't report them. The platforms don't seem to care much. And what will happen is they'll often hit up a Lund Loop subscriber, pretend they're me. They'll say, hey, I just want to check in with you, see how things are going, or how are you enjoying the Lund Loop. Next thing they know, they're saying, hey, I've got a VIP version of the Lund Loop. It's only $500 a month, and it's got guaranteed winners. Or, hey, I manage money for people, and I've got a great track record, and it's just a minimum of 25 grand. That is not me. I only have one product. That is the Lund Loop Substack. It's $300 for a year. That's it. There's no VIP Substack. There's no money. I don't manage money for people. So if someone comes up to you, if someone approaches you on social media and represents something like that, that's not me. Please report them. All right, back to our regularly scheduled program. Who was that good looking man? I'll tell you, I've done probably tens of thousands of hours of video, and I never fail to squirm when I see myself on screen. It's either that or I say the wrong word or something. I just go, ah. Anyway, I have my executor of my estate is ordered to burn all of my videos once I pass away. All right, let's go over here. And let's jump into today's daily update. So the first thing that I always do in the daily update is I look at the intraday action if it has significance. Sometimes it does, sometimes it doesn't. One of the things you'll see over time is that we will key off of the 20 EMA often. So let me give you an example of what I'm talking about. The 20 EMA will often be the limiter on the upside or the downside that will determine if we are in what's known as a trend up day. That's a day that goes like this and just keeps going, or a trend down day, which is the opposite. So the 20, for example, back here on the 24th, see how the 20 provided support there, provided support there. When we're in one of these days, we know that we have a better chance of our setups that trigger following through. Today was the opposite of a trend update. It was just a chop fest. We gapped down at the open. We did rally, we did recapture, but where do we run into resistance? At the 20. We came back down, and this is the lowest close in that opening 15-minute period. We stopped right there, and then we rallied, and it looked like, okay, maybe we're going to go back to the highs from the previous day. But we kind of fell off a cliff here, did a little bit of, basing right here, and then into the close dropped off. Here's the thing. We should be down today. We've been up 5 days in a row. And the idea that we were going to be up 6 days in a row, I mean, the odds of that are just so low. By the way, it was X, the band X, doing Poor Girl in the beginning. I forgot to highlight the audio bug there in the beginning. So this pullback is totally expected. And what I don't get is people were freaking out today. Let me pull up the Discord here. People were freaking out when the futures were down before the open. Like, why wouldn't they be down? Again, we were up 5 days in a row. Also, I posted this in the Discord, and it occurred to me that if you're a new subscriber, you might have taken that literally. This is just tongue-in-cheek. I've been talking about Crash Watch since here. And the point I'm trying to make is everybody's looking for the crash all the time, and the market continues to just go up. So I was being a little bit farcical there. Anyway, so long story short is today is exactly what the market should have done after a 1, 2, 3, 4, 5 day pullback. I mean, we are still above the ultra short EMA, which is the 8. So let's just go around the horn here. So SPX, there's nothing technically wrong with this chart. I mean, look, you could argue that we are down and volume is up. Okay, you never want to see that. But I expect this thing to pull back into this area. It's either going to correct through price or time, right? Price means we're going to come down in price, but time means we could just go sideways and wait for these moving averages to catch up. We are now in that move after the move mode. Do I want to go to that? Let's see. Hey, Brian, where are you? Freeze frame on that. Move after the move. We've talked about this a lot. I'll talk about in the future. I don't want to get into it right now too much. But the point is, we're looking for the move after this move where we can define our risk. So we get maybe a 1 or 2 or 3 day pullback here, and then we move back up like this. This is our risk area. So that's what we're looking for right now. If we go to the Qs, same sort of scenario, right? Starting to pull back in, and maybe we firm up around this area, but what a very orderly pullback today. I mean, we're down 1/3%. Again, there's nothing technically wrong with this market that I can find. IWM down a little bit more, but again, it had an outside move last week. I think we were up 6.5%, so it makes sense that it's going to come back in. Also, we've been talking about this resistance level, this 4-year-long resistance level that we've been trying to get through. You don't get through something like this cleanly. So we are working our way through this right now. And then finally, we've got the Dow. Similar thing. What I like is that all the indexes are in sync, right? They're all pulling back very orderly, very calmly. As long as we don't see some massive red bar pop in here, there's nothing wrong. Nothing wrong right now. Now, where there is something wrong, and let's get rid of this bug right now, is in crypto land. And this is very interesting. We're seeing a decoupling of crypto and stocks. Like, look at what crypto has done during this period here and contrast that with what we've seen in, wait for it, go back there, sorry, what we've seen in the SPX. The SPX is very close to its all-time highs here. But if we look at Bitcoin, it's quite a ways off of its all-time highs. And also, we're seeing the same thing in Solana. Look at this. Solana is tanking. XRP is tanking. Ethereum is tanking. Cardano is tanking. So we're seeing this disconnect between crypto and the stock market. I think that's good. I think that's healthy. I think there's too much froth. Did I just kick the camera? Yes. There's too much froth in crypto. I think crypto is too speculative. And I think that the healthy money that gets out of crypto would possibly go into the market. So anyway, all right. So now what we do is we usually go through the ETFs. What we're trying to look at here is we're trying to figure out what ETFs, what major sectors are giving us clues that reinforce what we're seeing in the indexes. We also look at the dollar, bonds, and VIX. I'm not a dollar expert and I'm not a bond expert, but I can read a chart and tell you how it is from a technical standpoint. The VIX, okay, so we talked about this on Friday, that if the market does pull back, we could get a little bit of a bounce in this area on the VIX. The VIX tried to rally today, got knocked down. It's got all the moving averages above it. I would like to see it maybe stay in this area here and then roll over as the market moves higher and break below this low here, which would coincide right about with the lowest low in that range here, right? There's that lowest low, and this is where we'd be breaking. TLT. Wow, this is so interesting. So TLT looked like it had put in a bottom here. It looked like it was breaking out in this area, failed, looked like it was going to roll back over here, and then started to firm up and now has gapped down. And I'm sure this has something to do with Japan and what was going on with their stuff today. But that's a really, that's a pretty aggressive break there. Dixie. All right, so Dixie has tried to get above this level 1, 2, 3, 4, 5, 6 times, pulled back in a very orderly way, did the same thing here, is holding roughly in this area here. So, to me, it looks like, okay, it's held, and now we're going to start moving back up. Let's see, Bitcoin. We talked about this already. Really bad action in crypto. XHP. Consolidating nicely after breaking this intermediate term trend line last week. SMH firming up really nice. And what I like about SMH firming up is that NVIDIA is still way down in this range here, but SMH is actually off of that low. So SMH may be giving us a little clue as to where NVIDIA and some of these other names are going to go next. XBI finally has a little bit of a break after this amazing run right here, but still not even at the 8. The 8 is the ultra short moving average. That's the shortest one we use. It measures the ultra short trend. Then we've got the 21, which is the short-term trend, then the 50, which is the intermediate-term trend, and the 200, which is the long-term trend. And we're not even at the ultra short-term trend yet on XBI. XLF, we need to kind of consolidate in this area for a few days and then hopefully try to break higher. When XLF is going into new highs, it's hard for the market to pull back much. So it would be great if we could just break this intermediate term trend line pretty soon. KRE has actually been acting stronger than XLF, and it broke this intermediate term trend line last week. So it might be giving us a clue as to where XLF is going. Oil still can't figure out what it wants to do. It's just sitting at the bottom of this trend line, trapped between that and this support level. Sometimes we look at OIH to see if it gives us a heads up as to where oil might be going. If we believe it, oil's going to finally break that trend at some point. XLE is kind of saying the same thing. Gold popping above that pivot from a couple weeks back. Gold miners confirming that move. And silver, is on fire, just continues to go higher into all-time highs. And then pot woke up today. I think the news was something about, well, there were a couple news stories. One is Texas is somehow lightening up on their medical use of marijuana, especially for vets. And then one of the head GOP leaders in Congress said he was pretty sure that the president was going to reschedule cannabis before the end of the year. So, but again, this is not going to go anywhere until it gets a actual catalyst. All right, let's go to the red list. So this is my focus list. These are the names that either through price action or the pattern they're setting up have got my attention. And they're names that could graduate over onto our active list, to our daily setups list. So I'm looking here at Snow. What do I like about Snow? Well, it broke out here. It went up to the highs. It pulled back. It held right at this support level where it broke out. It's rallied for a couple days, and now it's got this tight base here right below the 21. This is a spot where we can define our risk, meaning if you get long above here, you know you'll be wrong if you come back in here, or if you're a little bit more conservative below here, right? So that's a spot we can define our risk. This is going to go over onto the to the daily setups list. Roblox. Similar scenario here, but not as strong, right? If we go back to Snow is not too far off all-time highs. If we go to Roblox, it just had this big pullback. This is more of a snapback trade. Here's where it initially pushed from. It pulled back to an old support level. Is there even to an old support level from here, and printed a little hammer. Again, this is a spot where you can define your risk. Above here, you get long. Below here, or again, here if you're more conservative, you're wrong. So that goes to the green list. Roku, similar thing. There's that 2-bar pattern after coming back in and holding a support level. I like that. So that goes to the green list. The only problem with these setups is that the market probably has to pull back for a couple more days. So it's hard to think that these things are going to actually trigger and follow through if the market does pull back. Let's see what else. Bros is working on this 60 level. I don't like this tail here. I'd like one more consolidated day right here to put on the list, but this could go. So this has been showing really good relative strength. Keep an eye on that. And then I just want to highlight something about recency bias. These are names here that are all affected by recency bias. Well, I'm just going to say I've been affected by them. So Jumia was just a horrible stock for the longest time, and I watched it forever and forever and ever. And when it started to reverse down here, I just couldn't believe that it was actually reversing. I just couldn't get my mind around it because it had been so bad for so long. And I've just watched it improve incrementally during this whole time and missed it because I was anchored to a old bias. So DraftKings, same thing, right? Horrible action here. But now it's starting to reverse a little bit. Again, I've took my eye off it because it acted so bad. Some people have done the opposite on some of these names here. Some people that, were involved in these names when they ramped. In fact, we were involved in a lot of these names. And then they start pulling back and they keep trying to buy these pullbacks, and they're not following through. So people that have a recency bias for how good these stocks were are now getting killed. Now, can you imagine? This is where I put it on our daily setups list, ASTS. Went from 40 to 100. Imagine if you rode this and then you bought the pullback here and then you added to the pullback here and you added here and you added here and you've given back everything that you made here, and now you're on the precipice where if this thing breaks down, you're actually going to go red on your P&L. That sucks. Same thing with BM&R. Everybody was, this is going to be so great in this area, and now they're trying to buy it here and it's not playing out. And finally, Oklo, right? This is one that went from 70 to 190, and people have been trying to buy it on the pullback and it hasn't worked. This is why you can't really get stuck with recency bias, whether the recency was a great stock or a bad stock. You got to just play the technicals as they lay. So, all right, let's go over to the green list, the daily setups list. These are names that were on the list. Reddit triggered, popped about 3% today. So we're going to move it over to the active list. And by the way, if you don't fully get this right off the bat as a new subscriber, first of all, go to the core concepts and look at what we're talking about here, why things are on the daily setups, why they go to the active list. But just stick with it. You'll get the rhythm of this within a week or so. Apple was also on the daily setups list, this very tight candle here, and it triggered today up about 1.5%. So this goes over onto the active list. Let's see what was on the active list. Dash. A lot of these names were snapback trades right here, and they just continue to extend. Usually I'll keep something on the active watch list if it's above the 8 EMA and if it doesn't break a pattern. So this is going to stay here. Las Vegas Sands has been just fantastic, continues to go higher, so this stays on the list. Micron, moving higher, that stays on the list. Toll, a little bit of a pullback intraday, but holding this area, very strong. KBH, also very strong. Palantir is pretty close to going back on the green list. In fact, it probably should go back here because I think this little area here is where it could really move. So that's going to go back on the green list. Tesla. This is so interesting. Everybody always talks about VWAP from all-time highs, from all-time lows, sometimes from pivot points. But if you talk to Brian Shannon, and I've talked to him a lot, VWAPs are also very important on significant moves. Like if a company comes out with great earnings and gaps up, you put a VWAP on it. If they have a new product announcement in it, moves the stock up or down, you put a VWAP on it. And this is a significant move right here. This is when Tesla broke out from this range, right? Broke above the 365 level back in September. It's a significant bar. So I've got a VWAP on this, and it's just, we were above it this whole time here. We lost it, and now we're right back up below it, just above it on these 2 days. I think if we can get going here, bulls are really going to get in charge. So this thing, I think, has to go back on the green list. SoFi, still active, but it needs to get moving here. Hood, still active, but it also needs to hold up here. And finally, Coin, which we originally had put on the list here, and it was one of those snapback trades, a type I don't really like, but it did extend, and it went all the way from 244 as high as 280, and now it's kind of broken and back below the 8, so we take it off the list. So, all right. So anyway, thanks again if you're a new subscriber for being here. We're glad to have you as part of the community. Hang in there. This is all going to make sense sooner than later. And get in the trading room, because if you get in there, I'll see you there. Bye.